Good morning, Karen and Stephen. Thanks for having me back on the show. Today, we are presenting a solid set of results, capping a transformational year for our group. The most important lens to evaluate the progress of the company's operating capital generation. That is up 14% to 1.3 billion euro, nearly 1.3 billion euro. And why is that important? Because it's a future predictor of the remittance capability of our units, which in turn informs the future of the free cash flow generation. And that's very important for our investors. Now, what you're also seeing is strong commercial momentum that we were able to sustain in many of our markets, especially in the United States. And our operating result was indeed lower versus the same period last year. And that is due to two things. First of all, half of that is explained by one-offs last year that did not recur this year in the operating result. And secondly, we have taken proactive management actions to improve and stabilize the so important metric of operating capital generation. And that in turn has, on an IFRS basis, a depressing effect on the operating result. But overall, I'm very pleased with the results that we are announcing today.
Can you just talk about where you're aiming for? Because you've set out some goals, and in particular around leverage. You're still aiming for around 5 billion euros by 2025 in gross financial leverage, but also the news flow that the company is trying to re-elect you as CEO. So just give us a sense of what lies ahead from here.
Well, we have had a Capital Markets Day event last year in London where we gave our plans for our US business specifically, but also have expressed targets for the year 2025. And one of those targets is a leverage reduction to around 5 billion on the balance sheet. And in fact, we've been able to already accomplish that today in the fourth quarter. The other targets are operating capital generation to the tune of 1.2 billion. And you have learned today that we're at 1.3 billion for the year 2023. Then our free cash flows we want to increase to 800 million, and it's now standing at 715 million. And then, of course, we aim to for a target on 2025 of 40 cents per share on dividends. We are well on our way to meet those targets. In fact, today we have announced to increase our dividend per share with 30% versus the previous year to 30 cents per share. And that's also proof testament to the fact that the transformation of Aegon, which we have started on 4 years ago, is well on track.
Lard, you've given me part of the answer for my next question about the increased dividend as well, but the increased FCF, again, you've given us a target for 2025, expect free cash flow around 800 million euros. Obviously, you're looking to keep that figure or grow that figure. What else are you going to do with the free cash flow the next couple of years?
Well, the free cash flow came out in 2023 to 715 million, so we're well underway and on the trajectory to obtain that target by the end of 2025 of 800 million. What we're going to do with those cash flows is a couple of things. You know, the cash flows, of course, are a basis for capital returns to stockholders. That's number one. And number two, we aim to transform our business. So if we see value-creating opportunities that can enhance our cash flows moving forward, we will look at those. But the most important thing is that we've launched a very ambitious plan to organically improve the business, and that is our main focus, our primary focus.